good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Aisha Faridi as well as Ajay Sharma. And for now, the market continues to reel under pressure. If you're looking at the Nifty, we've managed to hold on to 22,100, but just about, because there was at one point of time that immense pressure that was threatening to go below the mark of 22,100 on the Nifty. Sharper cuts when you look at the Bank Nifty, because that index is down almost 300 points as we speak. The mid-cap index has also given up gains. That one is in the red because earlier it was managing to outperform, so it's actually just managed to hold its head above the water and just in the green right now. And the small cap index too is showing signs of a bit of an outperformance, I believe, because there is a bit of green on the screen on those indices. Sectorally speaking, what's clearly been the fallout case or the weak link today has been IT. Take a look at Infosys ahead of its earnings. That stock is taking major pressure right now, almost a 3% cut coming in on Infosys at the lowest point of the trading session. Numbers, of course, are expected Thursday post-market, but the street is worried about the performance there. Even LTI Mindtree for that matter, given the fact that the slew of exits continue at the top, that has put pressure on that stock, and then the likes of Coforge, Emphasis too are coming under pressure. But what's been doing very well has been Exide. That stock again is seeing a gain of 8%. Amara Raja Battery is also something which has moved up with it, and then those smaller names, the stationery companies, Happy Forgings and some of those other gainers come to mind. But overall seems like that there is a bit of a slip as far as the market mood is concerned right now.
Right, absolutely. Just taking stock of what else has been happening. Exide, you can't take your eyes off from this one stock today. It's at a 52-week high. 7.5% higher is where that stock is. Eicher Motors, Laurus, Madison, they're all holding up very well. But Ajay is back, and Ajay, you've been quite globe-trotting from east to west, from the islands of Hong Kong all the way to London. What's the global chatter like?
Well, first
Not about India, but what's happening in Hong Kong and what's happening in London.
See, there's a major rush for premium realty globally as well. So all the hotspots of, say Ho Chi Minh for starting, I was there, Hong Kong, and even London. Asians are taking over. The crazy rich Asians are taking over like how. So that's something to watch out for. But regarding India,
So China is bouncing back?
China, there's a massive migration of millionaires and billionaires from China to everywhere in the world, and they are looking for hot properties. So that was one of the feedback which I got. And of course, India. I met a lot of India dedicated funds are being raised. So all these fancy Morgan Stanley, Rothschilds, and that kind of family offices, fund managers are taking off from there and setting up, especially 15-20 years kind of pedigree fund managers who have already worked with great institutions, now are raising India dedicated money. So won't be surprised that in the next coming months, and even after this rally, they're saying India's story has got much more legs. So I came back, but of course valuations remain a challenge. So that's something to watch out for. But today Reliance Industries is a stock which I have on my radar. Because of the Musk tie-up, everybody is talking about reports, of course, nothing concrete yet, but also because the kind of run-up Jio has actually made, pull up Jio as well, 4% move coming in, and that is taking along all the other AMC stocks as well. So that's something I have on my radar. Daljit Singh is joining us along with Kunal and Nuresh. Daljit, I want to talk about AMC space, Reliance, Jio, all of that, because one would have thought that BlackRock Jio JV would actually cast a shadow on many of these AMCs because of commissions coming under pressure. They're planning a mass play, but other AMC stocks are also rallying. How do you see this part of the market?
Good afternoon, Ajay. I think this industry is poised for a very big growth. No, there is a very long runway ahead. As just now you were talking about premiumization and billionaires moving from one country to another. So this space is opening up so much, and now that this has become a cult. No, a few years back, I remember when we used to go to HNIs, it was very difficult to raise a few crores. Today, everybody starts with 10, 20 crores like that. So the ticket sizes have increased. There is a willingness to invest more in the markets. So when that will happen, obviously AMCs are the big beneficiaries. And with companies like BlackRock coming in, it will again, when a big player comes in, it opens up the market, no? And market actually expands. This is a growing industry, growing market. So obviously, getting one more player will not probably hurt the existing players. It will actually make them more competitive. It will make them get them more systems in place, processes in place. So actually, it will be good for the industry. I think that is what market is also believing, and we'll see how things pan out over the period. Once they start, BlackRock actually starts executing things, how they execute and how it works. So, but it's definitely a space to be in because there is a lot of demand.
There absolutely is. Kunal won't talk about geofinancial, not enough data to track that. But what about the rest of the market construct? I mean, I was just looking at Europe. They've started off sharply in the red. We've not done bad at all.
Yeah, we've not done bad, and I think what I can probably sense is two different types of markets. If you look at large caps today, the two sectors which have been more pain points for the markets. One, of course, is the IT names, and specifically the larger cap IT stocks, and the other is financials as a basket. I think these two sectors have dampened the mood of the markets or gone to a corrective phase for themselves. But the other end of the market is pure in the way the mid cap, small cap indices have behaved. We've seen very good recovery. In fact, there are many fresh stocks which are now heading towards breakout or coming back into a breakout of their small patch of consolidation for themselves. So that also is a very strong sign or a telltale sign that we could be looking at two different types of divergent trends of the markets, that the index trends or the larger cap weighted names, these two sectors specifically, they could continue to be more laggards, underperforming as such. But the other end of the market, which is mid caps and small caps, I think that's where the action could probably continue.
Shivangi Sarda is joining us now in place of Nuresh, who's usually there. But Shivangi, Bank Nifty, I want to start with Bank Nifty. What do you look at the setup? How's the setup looking over there? Because that is also not contributing a whole lot in today's market.
Yeah, hi, Jay, and thank you for having me on the show. So we have seen that, Bank Nifty, it did, start with a slight bit of a hope in this series, but then it could not hold at higher zones. Today, it has taken support near its 50-daily exponential moving average, but then again, we've seen that there's some sort of relief towards the private banking space. So we are expecting that this should, act as a bounce back move over here. So we are looking at 47,250 as a crucial support zones for a bounce back move towards 47,750 on an immediate basis, and then 48,000 if it holds near these zones above its 50-daily exponential moving average.
Okay, point taken. So that's about how the market mood is looking like right now. But shifting focus to what's happening in the market in terms of the individual movers right now. So yes, IT continues to be that pain point for now. What's holding out is perhaps the entertainment as well. That one has seen a bit of a spike. And then some of the auto names, select one at that. Motherson, for instance, is up 3.5%. You have Eicher Motors actually surprisingly doing quite well for itself today. Escorts 2 is actually holding up. On the losing side, Metropolis has taken a sharp cut. Let's pull up the stock of Metropolis if that's showing that kind of weakness. So yes, down about 2 to 3%, but in futures it's actually taken a bigger knock right now. But just wanted to get a sense from you, Daljit, as far as the IT sector is concerned, this weakness will be a buying opportunity, you believe? And that's been the question for a while now, but seems to be, if you go by the management commentary of TCS, that we're closer to the end of the, end of the tunnel perhaps.
I don't think so. We don't believe that they are end of the tunnel. I think it will take some more time, and especially the BFSI segment, which is the mainstay for most of our IT companies. Unless that picks up, I don't think they will have too much to talk in terms of numbers. And there is so much of change going on in the industry with the generative AI and all of that. So how these companies will play all those things, I think we will have to give some more time. We were also expecting that probably we are coming closer to the end of this down cycle and maybe some things will improve. But with the commentary coming from TCS, I think our view is that probably it is better to wait for another 6 months or so. So we are not, as of now, I don't think we have any investment in IT. If there is, it is only very, very small in some small company. But otherwise, we are totally out of the sector. And probably for next few months, we don't intend to come into that.
Intend to come into IT anytime soon, but are you coming into telecom? Because that's the other heated one. Take a look at Bharti Hexacom today, up 13%. Jefferies, of course, believes that the fair value perhaps of the stock is much above the 1,000 rupee mark as well. And just what last week that stock had listed at what 570 rupees was the issue price, if I have it right, and already made 400 bucks, almost doubled. And of course, Vodafone Idea, the FPO is underway right now for Anchor, will open for the public on 18th as well. What's the view on a couple of these counters, Aljit?
There's a lot of noise because of this Vodafone Idea issue coming in. That's why I think the sector is again in buzz. But if we see in terms of fundamentals, ultimately the story is still on the basis of that ARPUs have to increase. Now ARPUs are increasing by 2 rupees, 3 rupees. Companies want to do it by 20 rupees, 30 rupees. That's not going to happen immediately. In any case, the sector has only 3 companies. So there is not too much to do there. That's why we tend to avoid that sector. If we have to play indirectly, some of it we play through Reliance itself. That also has 1/3 of the portion of telecom. No? So if one has to play that, one can play from that side. But we tend to avoid because we don't see too much of structural thing happening as of now.
That's the take coming in on telecom. In the meantime, let's address the high flyers today, and that's got to be Exide all the way. In fact, a major chunk of that move has come in just month to date in that particular stock. And EV battery makers have been powering up ahead after the announcement of partnership with Hyundai and Kia for EV batteries came about. Shrishti is here to tell us what is behind that move that one has seen in Exide. Shrishti?
Well, yes, Exide as well as Amara Raja, they both seem to be really excited in trading session today, and that's especially after when Exide announced that they are coming out with an alliance with Hyundai as well as Kia. They have joined a pact for EV batteries in India, and that's indeed a very big positive for the company coming in. And after this announcement, we have seen a lot of brokerages going ahead and raising the target price for Exide specifically. So firstly, let's take you through what these brokerages are saying. For today, Nomura has come out with a note, hike the target price to 485 rupees versus 233 earlier, maintaining a buy. Just yesterday, Morgan Stanley raised their target to 485 levels. Investec has also raised their target price, and even JP Morgan. What Morgan Stanley is highlighting is that the pact with Hyundai and Kia actually validates the capabilities, and it is likely to be a multi-year contract, and the government supported Made in India EVs is a strong for such tie-ups in the times ahead as well. So they are positive that going ahead, both of these companies can actually garner more of interest from all these OEMs. Wherein on Nomura's part, they believe that there is a possibility of import duties being imposed on the cells in the next few years, and they have also raised their multiple to the lithium-ion cell capacity at 3 times of book to value in line with the global peers. And we are aware that Exide did announce their pact with Hyundai and Kia, and this is giving confidence for Amara Raja as well, because do remember that India's EV penetration, especially in the 4-wheeler segment, is nearly about 2 to 3%, and in the times ahead is expected to improve. And both of these companies have come out with their capex plans for this particular facility. For Exide, they have said that 4,500 crores in the phase 1 is what they will be investing, and the first order from 2 of the major OEMs is already what we have got. And for Amara Raja, 1,500 crores is the initial capex, but going ahead, they want to raise it to 9,500 crores as well, with a 16 gigawatt hours of capacity. So both of these companies are really geared up, and that's why we are seeing the re-rating, because with the first order, it's the opening of the doors that has happened in the EV battery space for Indian companies, and Exide has definitely gone ahead and got that thumbs up from global OEMs. And similar is the market expecting that maybe in the times ahead, Amara Raja could also come out with one such announcement. But in the race, who is coming first, then Exide is definitely leading the race for right now.
Thanks very much for that, Srishti. So Exide and Amara Raja both, which are upping their game as far as EV related batteries are concerned, and are setting up plants, and then subsequently they'll start supplying. But there is one listed company which is already currently manufacturing EV batteries and are supplying, and that is Exom Tele. The recent listing which happened, Exicom Tele, it started off as a battery manufacturer to telecom space, and then subsequently they diversified into batteries for EV as well. That stock has suddenly shot up 7% in trade. The IPO came around 180 to 200 or something, and now the stock has shot up because now people are realizing that this is also a EV battery play. Any thoughts on this company or overall the EV angle which the battery companies are now starting to display? Any thoughts there?
Yes, Ajay, we are holding one company there.
Okay.
We also wanted to play this story of EV, and that was one of the easier way to do. We chose the other company because that was trading at that time half the valuation of the first company. So in terms of valuation, it was a very attractive entry point, and now both of them are catching up each other. In any case, it was very clear that ultimately both are there are only two players which are of that size, and both of them are in the similar direction. They will invest similar amounts. They will also get the similar kind of opportunities. I think this order from Kia has removed that big overhang, which the question that we always used to ask these companies was that when these OEMs come, will they start manufacturing batteries on their own? It will be captive battery from their side. But with this order coming in, I think that has taken away that fear. Mostly, if the OEMs are willing to give this contract to outsides, that means this market is open for everybody. So I think that is what is giving a lot of confidence, and it's just the start of the industry now. The EV has a big runway ahead. So obviously, both these companies will do very well. I think we have already invested in one as a disclosure, and I think we are looking for a very good gain there.
Right, okay, just stay with us, Daljit. Lots more to talk about. We'll continue our discussion with our experts after this very quick break.
So that's Exom Tele, which has shot up 8% in trade, apart from other battery companies. But some other stocks are also in focus. Market platform stocks, and one stock stands out in that space is BSE. From 600 odd to almost pull up the BSE Limited, almost 2800 now. It's run up quite a lot, but the way management has been guiding about new products being launched very shortly, there is a lot of interest still at these levels. But how are the charts looking for this one, Shivangi? BSE at 2800, does it provide opportunity, risk reward? You finding it okay even now, or some pullbacks? What levels to watch out for?
So, with the sentiments, now we have the, the increase in the number of transactions. And of course, this platform stocks are going to be in momentum. The stock is already up by, 30 odd percent in year-on-year basis. And we've seen that, there has been buying at every small decline. So overall, the structure remains quite positive, and we've seen there has been a very strong pullback move in the last 1 month. So overall, the stock is a buy from these levels as well, and we are looking at 2950 odd levels for the next targets, with a stop near 2780 zones.
A bunch of these stocks which are in focus. I want to also check in on what Gujarat Gas is up to. That had a positive start even in an otherwise weak market at open. Excuse me. They've signed the non-binding MOU with Indian Oil for accessibility of energy solutions. Gujarat Gas, of course, has completely given up all of its morning gains, and it's now languishing at the day's lows. 3.6% of a cut coming in on Gujarat Gas. And the other one, of course, is ONGC. We've been marking this one. Of course, today there is news impacting ONGC, much unlike yesterday, wherein that brokerage upgrade came in and the stock was in a tizzy in an otherwise weak market. The windfall tax on crude has been upped, and that sentimentally wouldn't augur well for ONGC. But even after a weak start, you've seen the stock pick up from there, although it's off from the day's highs. Kunal, strong on the charts for ONGC. What is your next target on ONGC at 282 thereabouts right now?
Yeah, so 2 days of very strong volumes for ONGC, and that's, I think, the hallmark of the chart. So it's not too much of a price action, which is very exciting for the stock, but it's the volume action, because in the last 2 days, the cumulative volumes for ONGC has been one of the best volumes the stock has shown, especially at a point when the stock was almost at those 150, 170 mark, start of 2023. So I think from there on, this is the first time when we've seen some excellent volumes coming up for the stock. Now, there are two aspects which could probably occur into the stock price. A, it could go into a consolidation because the bulk of volumes have already shaped up into the stock price, as well as the news flows being a lot more buoyant for the stock. But on the other hand, if the stock manages to surpass today's high, which is around the 290, 292 odd mark, I think that could trigger a second round of an up move. So I would probably wait out for confirmation of 290 breakout for ONGC approximately, and I think that could be a trigger point to try and initiate a fresh buy.
Okay, point taken. Just wanted to highlight a few more stocks. Markson's Pharma is up 12%. If I have it right, MIT had been one of the buyers in a large trade that happened yesterday. And of course, VST Industries is the other one wherein RKD had increased the stake in a large deal that happened yesterday. So a couple of those names come to mind. Aegis Logistics is also high by around 9%, and in the last few minutes we have seen a bit of a move on the likes of Saregama, Thomas Cook, etc. as well. So some of these buzzers in the trading session right now. But autos as a pack has been holding up quite okay. Take a look at the strength in Eicher Motors right now. The stock is actually bucking the trend quite nicely, 3% higher. And then of course there are other auto names as well which are holding up. Daljit, what's the view on two-wheeler space? We talked about EVs and the kind of ancillaries you are making a bet on, but in the two-wheeler space, any names specifically?
In two-wheelers, we have, in fact, one of the largest exposure of our fund, mainly with the company that caters to the OEMs, and we have seen that they're performing very well in the last few months. The idea is that in two-wheelers, two things will happen. One is on the domestic side, rural portion was not doing very well. For last almost a year or so, rural was very, very low. And now in the last 1 month, we've seen that numbers have started picking up. And with this news flow about the monsoon being very well, and probably we'll have good rainfall this time, we expect that rural area demand should come back. So two-wheelers which are exposed to rural area, they are likely to get the benefit. Second thing is this premiumization. The higher end 350cc, 250cc, those kind of bikes, they are doing very well again. So instead of the demand is shifting from 100cc, 125cc to 150, 250, those kind of things. That means more realization for the company, and which will mean obviously better margins for the company. Third is the export side, which is picking up now. One of the big OEM was always impacted because of non-availability of dollars, having a lot of geopolitical tensions in those areas. Some of them have receded, and the export numbers have started coming in. So the ancillaries which are exposed to these three things, they are likely to get benefit, and we have some exposure to some of them. Then also we have some exposure to the ancillaries which are supplying to the high-end cars like Mercedes and BMWs of the world. We've seen that both these companies have shown their best ever numbers in this year, this quarter also and this year also. So both those those ancillaries which are supplying engine parts or powertrain, they are also likely to be beneficiaries. So we are holding some of them.
Okay, good to get in that perspective. Always good having you on the show, Daljit. We'll let you go on that note. Let's take in some closing trading ideas as well. Kunal, let's start off with you.
So I'll go with Chambal Fertilizer as a closing trade. The stock is now seemingly bouncing back from its key support of 360. It's still some distance away from the breakout, but I would probably preempt that this move which you're seeing today could lead to the breakout for Chambal Fertilizer.
Okay, Shivangi, how about your closing trades?
So we've, eyes on the HAL. We've seen that this kind of a volatile market scenario gives limelight to the defense counter. And this stock particularly has given a consolidation breakout of the last.
Snap that line with Shivangi. We'll just get her stock ideas for you. If we can just pull it up on our screens right now, because she is recommending if we can just have her ideas. Yeah, she had a call on Hindustan Aeronautics, I think. We will get back with her stock ideas in just a bit. For now, of course, we're going to take a very quick break.
Welcome back. Well, taking stock of what's happening in the market, and it doesn't look like we're in for a huge recovery at this point of time. So pretty much around those levels of around 22,100 and thereabouts. The bank nifty continues to be down about 300 points. Actually, from the banking index, the sole soldier today is HDFC Bank, because that one is holding up with a gain of around 0.8%, while rest of the market and rest of its peers, whether it's AU Bank, IndusInd Bank, PNB, they're all down and out in the trading session. In fact, HDFC Bank is your top contributor to the nifty right now. In fact, Kunal, on the charts of HDFC Bank, what are the levels to watch out for?
So the low the stock had made yesterday or day before, that is closer to 1475, 1480. That remains to be a retracement support for HDFC Bank. Now the concern is the resistance for the stock, because the resistance of that 1550 levels from where HDFC Bank retested those levels and then turned on the downside, that also coincides with the 200-day moving average for HDFC Bank. So I think that could be a critical zone, and we've seen historically that stocks, when they come back into a recovery phase, when they are 15%, 20% divergent from their long-term moving averages, they tend to cover those divergences in a short span of time, then consolidate and then gather momentum to try and break past about those critical averages. So I think this time around we could probably be looking out for a potential breakout about that 1550 levels, but that's a zone of confirmation which I think a short-term trader has to wait out for.
Bunch of other stocks which are actually holding up in trade. Let's see what Radico Khaitan is up to, and they've unveiled the Kohinoor Reserve Indian Dark Rum at one of these global summits, which apparently is for the travel and beverage industry, and it's very, very specific to duty-free brands apparently in the America, and that's where they've unveiled this dark rum at a price point of about $49.99. So that's of course one stock which is in focus, holding up in trade, and the other one of course has been Godfrey Phillips as well. Kunal, all your favorites, liquor, tobacco, both together, doing well?
Yeah, doing well so far. Godfrey Phillips is something which was on the thick of a lot of price action news flow some time back. So I think there was a flurry of price action for Godfrey Phillips. The stock had moved from I think 2000 or 1800 levels to 3,200, 300 plus levels in a very short span of time, and then gone through a patch of consolidation. Now from the liquor space, there's another name which is also looking attractive, and that's Som Distilleries. I think that's a stock which is around 300 levels. It's coming back after almost 5 or 6 straight months of price correction. I think from 400 the stock fell down to as much as 250, 260 rupees, and now it's come back about the 300 levels. That could be another name which could be added into the kitty.
Interesting. So, on that point, I'll tell you something. While coming back from London, at the Heathrow, I was just checking out the various spirits in that duty-free, etc. I was checking out for what is the 52-week high-low. The cheapest bottle was almost 40 pound, 40 pound, and the highest was 11,500 pounds. So I asked, the staff over there that, you guys actually just put it over there, or are there, people actually buying? So she told me that you'll be surprised to know an Indian gentleman just last week bought a 11,500 pound bottle, and it became talk of the entire. There are some 4 or 5 duty-free shops in entire Heathrow. It became, a subject matter to talk about. 11,500, talking about 12 lakh rupee bottle. 40 actually. It was a 40-year whiskey.
No wonder.
So clearly, Indian buyers their taste for spirits is evolving.
And it's reflecting in the stock prices.
Clearly. Anand Tandon is now joining us as well to talk about the markets. Anand, you have a very close eye on global developments as well. In the last 48 hours, the way US retail sales data on a stronger side, the CPI data came in higher. The narrative from delayed hikes is now going toward delayed cuts is now going toward perhaps a hike back on the table, and that is leading to dollar index rallying, yields rallying. Is that a legitimate concern, or these data points should be taken with a pinch of salt in your view?
So I think the US Fed is in between a rock and a hard place, right? I mean, typically, irrespective of what they say, 3 months before the elections, they have to start cutting interest rates. So, while they will keep on talking about being data driven and so on, the reality is that, the president has already voiced an opinion saying that he would expect that the June meeting would actually announce a rate cut. So now it's going to be a little hard for them to actually go ahead and do something else. There is almost no chance of them increasing interest rates. They will find some reason why not to. And also, there's not that much of a case to be made. You can always find some data which justifies that. The question about a rate cut is already a little difficult to justify, but I think it will still come through. Despite that, I think you are at a stage where the market is showing signs of nervousness, and most of the trades that were kind of geopolitically linked as well as linked to a potential cut are playing through, because you are still, despite a small fall in gold and some of the oil prices and so on, I think that the longer term or even the medium term uptrend continues. So I think you are still looking at a situation where the US will be looking to cut. Don't forget the fact that from next year onwards, their debt interest payments on their debt will now reach $1.5 trillion, which on a economy which generates about four and a half trillion, kind of revenues, you are going to go from something like 400 billion a year ago to 1.5 trillion a year later. That's a huge cut, and a huge ask, and there is no way of taking that away unless you actually start managing the interest rates. So I think from a both political as well as an economic point of view, you will get suppression of interest rates in the US.
Okay, suppression of interest rates is what is likely to happen. But in the meantime, it is all about that visit that Elon Musk is making to India, and that's had the street excited with respect to what's happening to the auto sector, plus what else could be on the agenda, right from the Starlink, product of his, to the fact that there could be certain backward integrations as well that might happen. This is the question we've been posing to a whole host of industry, veterans and corporates as well. Listen into what Minda had to tell us, because they were quite hopeful that they would participate in that entire EV ecosystem, and they're speaking with a whole host of EV companies, including Tesla.
We are definitely working with the majority players. I would say the top tier 1 players. We first, to just put a context, today there are more than 250 registered EV two-wheelers in the country. So definitely we can't work with all of them. So what, as a strategy, we have been doing is we have definitely been working on the existing players who are in IC also and EV also. So that's almost like top 7-8 players we are already working. On top of it, the new age EV players who are specifically only in EV and not in IC, we have sort of shortlisted top 7-8 of them whom we are working. So from that perspective, we are largely maybe working with 95% kind of volume which is currently being generated. So as a strategy, definitely we don't want to work with all of them, because then you have limited bandwidth and every customer needs the same kind of servicing, and we don't want to falter on that. So yes, we might be a little conservative in terms of number of players who are currently into the EV business, who are the new entrants. So definitely we are engaging with only with Tesla. Definitely Tesla, be it JSW, be it whosoever are the new players, we are definitely engaging with them and waiting for the right opportunities.
Okay, and here's some buzz that we are picking up, and we told you earlier that we're picking up from our market sources that a potential institutional investor for Vodafone Idea's 18,000 crore rupee FPO could very well include Rajiv Jain run GQG Partners as well, and some key global and local asset managers too. Anurag Joshi, my colleague, is here with more details.
So Vodafone Idea's 18,000 crore rupee follow-on public offering, which is the biggest such equity sale in the country, opens for anchor investors today, and a slew of investors are lining up to invest in the offering. And our sources have told ET Now that some of these investors include Fidelity, GQG Partners, which is run by Rajiv Jain, Aditya Birla Sun Life Mutual Fund, HDFC Mutual Fund, and these are seen as possible investors in the issue. And ET Now had reported earlier that Vodafone Idea had already secured the commitments from the institutional investors for the upcoming sale, and this issue is open for the public from April 18 to 22. Now, yesterday the management had told the media that about 5,700 crore rupees of the issue will be used for the 5G rollout, and following the issue there will be some change in the shareholdings of the key shareholders, which is the government, the Aditya Birla promoters, they have equity, and the Vodafone PLC. The government's holding is going to come down from about 33% in the company to about 24%. Aditya Birla promoters who are holding about 18%, their shareholding will come down a tad, but they will continue to hold above the key level of 15%, and Vodafone PLC's holding also reduce because of this.
So that's one stock to watch out for. Anand, in this kind of a market, where do you find most comfort in buying, or are you kind of after the massive rally last year more on the sidelines right now?
Yeah, I don't think that there is any great need to be rushing in to buy right now. Clearly, the market, which was in a momentum upwards, has also kind of paused. And anyway, the market is looking stretched from a valuation point of view, as well as from the kind of rally that we have seen, which has been almost one way. So there is no particular reason to be rushing in. That said, if you are looking to, from a macro level, if you are looking to see where you might still be able to sustain an uptrend, as I said earlier, you might want to look at contra US dollar trades, and therefore I would still be bullish on energy and metals, including metals like which have already seen a big upswing, like copper, etc. I think some of the precious metals also are not looking too bad. Silver has underperformed dramatically. You could see a catch up there. You have some of the industrials which are used, for example, in EVs, etc., like palladium, have done very badly and therefore are due for a rise. So I think it's more tactical kind of plays that you are looking for. I don't think there is any great value in any of the sectors of the market. If you really must push it, it will come back to really the private sector banks and so on.
Right. Okay. We've been flagging off the event of the day, which is the launch of Aditya Birla Capital digital fintech app, where Kumar Mangalam Birla, of course, spoke and said that, the AB Group is eyeing to have 30 million customer base for AB Financials in the next 3 years. Hear out what he had to say, and we also had a chance to speak with AB Capital Chief Vishakha Mulya as well to understand their future business targets.
As we advance into 2024, the launch of 2 new consumer-facing ventures marks the group's commitment to constructing a growth platform characterized by a unique confluence of strength and breadth. Just last month, we launched our paints business with an initial investment of rupees 10,000 crores, as you know, and in a few months, we will be launching a jewelry retail venture with an initial investment of rupees 5,000 crores. The ABCD D2C platform will further help ABC augment its digital footprint. It will acquire customers digitally and, more importantly, at scale, cross-sell and upsell in a frictionless manner, and become a full-stack financial services provider. And the plan is to acquire 30 million new customers in the next 3 years.
We have existing around 35 million customers. So the idea is to double the customer base in the next 3 years. At the moment, the app is for mainly acquiring the new customers to ABC. We will work with the partners where we don't have our own manufactured products, but idea would be to deliver all the manufactured products to our customer.
Okay, so clearly putting the entire focus on their finance vertical of the AB Group, so that's something to watch out for. But separately, in terms of the other details, Amara Raja Batteries is actually gaining more ground as we speak. So that stock too is now high by 12%. So clearly a bit of a catch-up happening versus Exide, which is actually cooled off a bit. Aegis Logistics, Titagar Wagon, Sterlite Tech, these are some of the other big gainers that we're watching out for in the trading session. Just quickly wanted to highlight Infosys and Wipro because what the expectations are for Thursday. For Infosys, we are expecting it's going to be a weak set, a constant currency decline of around 0.4%. The dollar revenue is also expected to decline 0.5% because it's a seasonally weak quarter for Infosys. There won't be a pass-through revenue. The third-party revenue is also a bit limited, and the commentary that we've got from TCS suggests that the discretionary demand is not back yet. And if TCS has actually managed to disappoint on the top-line growth, little other chances that actually Infosys will surprise us. On the margin, however, it will hold up at 20.7% because there won't be those one-time costs that we saw last quarter, and the deal win should also be okay. Of course, the most important thing is the FY25 guidance. Consensus seems to be building between 2 to 6%, largely around 2 to 5% mark. So that's what the company might deliver. Shifting focus to Wipro as well, because again, those numbers are expected on Thursday. Again, a weak set, maybe a constant currency decline of 0.2%. IT service revenue is also expected to be flattish, with a bit of a disappointment coming in on the rupee revenue as well as profitability. It's the BFSI vertical that continues to be a challenge, but for Wipro, the most important thing will not only be the Q1 FY25 guidance, wherein we are watching out for -1 to +1 kind of figure, but of course the new CEO, which came as a bit of a shock to street, that there was this sudden announcement of Thierry Delaporte actually stepping down and a new CEO coming. If and what kind of strategy does it entail is something that the street will watch out for. But for now, both of those stocks in the red. Anand, this is a question we've been posing our other experts as well. How should one approach IT right now? If you hear the TCS commentary, it seems like generative AI is going to be an opportunity for India rather than a disruption and a threat. But what's your view?
Well, the reverse of threat is an opportunity. Obviously, there is some money that can be made by doing things which are new. And so far, the Indian IT sector has always managed to deal with whatever technology innovations have come through. But the reality is that the generative AI is actually equal to what a commentator in the US once mentioned recently, that it is like finding a planet with 100 billion people willing to work for you for free. So that's the reality of what generative AI can do. As it improves, you will find that the number of headcount required to get things done for many of the cases, including writing code, is going to drop off very sharply. Now, clearly, there will be a new business of prompt engineers which will come up, and which we have already begun to see happen. But the number of prompt engineers required is way lower than the kind of manpower deployment that we need at the current status. So I think that's a very big threat that the IT companies have to figure going forward. Near term, obviously, till that kind of expertise is reached, you will be using more people to do stuff, because business in general is going to move towards generative AI and the use of it for many of the common works that you are beginning to see. Already, you can estimate that the number of, for example, bots that have replaced agents in terms of being able to answer client queries is tremendous. So at various stages, you will have a shrinkage of the kind of work. And that means that the trend that you are seeing of having lower budgets may actually continue for longer, including the fact that you are actually seeing most of the business that, for example, TCS has got have been cost takeout deals. So people in the US are looking to prepare for having fewer manpower employed and moving it out, whereas we are exulting in the fact that we are absorbing that additional flow. So for some more time, at least that flow will come through. But I don't think that you are looking at anything other than maximum of early teens kind of bottom line, which is more than paid for when you are looking at companies which are trading at 25, 26 times. Don't forget that an Amazon itself, a Google itself trades at around 21, 22 times next year, depending on whose estimates you're looking at.
Right. Anand, what are your thoughts on the real estate space? We've seen a massive amount of wealth creation in, not only the macro techs of the world, but even coming down the market cap, Ajmera, Prestige, you name it. We were just, Aisha and I were just talking about how not only the metros like Mumbai, NCR, but even the tier 2, tier 3 areas in the south beyond Bangalore, you're based out of Hyderabad, that place has seen massive rally in terms of pricing. What phase of the real estate cycle are we in? Are we in the middle stage, still early, or it's kind of already petering out?
I think you could argue that it is different cycles for different cities, because each city is actually a micro market. But that said, see, we have to go back to understanding that at the end of the day, a house is something that most people want to own and remains one of the largest investors for most people. So there are investments made in their lifetime for most people. So therefore, till you have a situation where there is a kind of, people still need to buy houses to stay in, and not everybody is out of being on rent, you will have a constant demand. Now, the problem with demand, it has two sides of it. One is the desire, and the other is the pricing power. And I think the challenge is that the pricing power is where you will face a problem. Most of the sales that you have seen right now have been at the higher end. And even though we have seen a large number of, around 1 crore houses being sold now, because obviously income levels have been rising. But at the lower end, I think you will find that there is a great challenge in terms of sales. So if you were to look at the markets, for example, in Hyderabad, my belief is that the best is behind us. It's not as if the volumes will start from here, but the cost of setting up, of buying new land to be able to build, and the kind of pricing that you're going to see for you to be able to construct it, given and versus the amount of money that you can actually assume that a consumer will give you 3 years from now when your building is ready is not very commensurate right now. Besides the fact that there is a huge amount of inventory that's going to be unloaded in the market in the next 1 or 2 years. So I think in terms of volume growth, you will continue to see growth. Many of the construction companies will continue to show good numbers for the next 2 years. But it is like most other things, the highest margin business is out of your hands now. Your inventory is going to come in at a higher price. And therefore, again, you have to be looking at those brands which can sustain in poor markets if you really want to invest today. Otherwise, this is a good time to start lightening up on the not so great brands with not great balance sheets who will find it difficult to build the inventory going forward.
Right. So that is about real estate. But closing ideas, Kunal, anything coming up on your screen? Because tomorrow is a market off, right? So I think a lot of people would be hesitating in taking positions, right?
No, as I said, I think there are a few mid-cap and small cap names which are still heading towards breakout. There are two names which I would highlight in that category. First is Poonawalla FinCorp. That's something which has come back into a breakout mode. I think from 470, 475 to now back again about that 480 plus levels where it's trading right now. It looks very attractive at current juncture and expecting the stock to head towards a breakout of the previous highs. 520 could be kept as an immediate target. Stop us at 475. And the second is about Ingersoll. That's a stock which is heading towards a 3 or a 4 month consolidation breakout. It's almost like a 350 point of breakout consolidation for the stock. So expecting a 350 point up move for the stock going forward. 4040 as a target, stop loss at 3720.
Okay, point taken. Anand, what's the view on power? We discussed real estate and the kind of upcycle we have seen, and you believe that perhaps the best is over in that. But what about power? Because, I mean, if you look at it on the ground, the demand-supply mismatch is quite huge, but then there are capacities also which are expected to come up.
Well, I think power demand is rising, and obviously, what was underutilized a few months ago even has now got fully utilized, and then some. And I think you would expect to see power growth continuing to happen. I mean, if power demand is growing in double digits in a place like the US, where you don't expect to see that kind of growth because of, for example, generative AI requiring huge amounts of processing capacity being put up, which requires new data centers and so on, you can imagine in a country like India, which has all of the pent-up demand plus the growth that is going to come through, hopefully, uh, which needs to be fed with energy. So I think whatever we are looking at in terms of the growth numbers is not going to be adequate. That said, whether you should be putting in huge amounts of money into it is a different issue. Many of the companies which are in the power generation business, for example, have already run up quite a bit, and now, for example, an NTPC is no longer as attractively priced, let's say, compared to where it was a year ago, because now whatever you are seeing has been more or less paid for in the price. The same thing goes for most of the private sector players. The grid was a little more interesting for a while, but again, these are all, they will all grow at a level which you can kind of predict very clearly because of the fact that they are all regulated entities, and therefore the kind of growth capex that, for example, Power Grid is putting up is more or less reflected in the price that you're seeing. So from a underlying demand and growth point of view, I think it's a sector which will continue to do well. From a investments point of view, I think you should have wait for a better entry point.
That's the take coming on power. In fact, we had a whole host of experts as well speak with us about, the power demand and whether or not summer season uptick in demand is going to be met. What are going to be the challenges and what's the offtake really for the power industry?
There is a good news. The monsoon rainfall during June to September this year for the country as a whole is expected to be 106% of the long period average. Or otherwise you can say that rainfall is expected to be above normal this year. Considering the distribution in the country, we are expecting uniform distribution in most parts of South India, Western India, Northwest India, Central India, with above normal probability.
In terms of the storage is an integral component of the whole equation. If we have to replace the fossil fuel capacity, because if you need 24/7 through renewables, then storage becomes a key component of the whole equation. So we have actually plans to tender out a lot of storage. So we are looking at storage also very aggressively, and we are technology agnostic on that.
And this year, it is expected that the power demand touches 260 gigawatt figure this summer. So to meet the requirement from energy side, against the production of 10 million metric ton from our Talavera mine, compared to the last financial year, in this financial year, the coal stocks at the power stations as well as at the mine pit heads are at peak. So I don't think that situation arises this financial year. It is better situation than the last financial year.
Okay, so that was about the power demand and the surge that we're expecting later in the year. But on that note, Anand, we'll let you go. Thanks so much for making time and speaking with us. Time to take the BTSC trades from our chartist. Kunal, what's your BTSC trade?
So the two buy calls which I've given, first is one Poonawalla FinCorp. That's something which looks attractive for a target of 520, stop loss at 475. And Ingersoll Rand is something which is also coming back into after 3 month or 4 month of consolidation. So would suggest a buy with a target of 4040 at stop loss at 3720.
Right, okay, let me hand it over to Vinny now and find out how the day has shaped up. Vinny?
So looking at the day today, yes, we recovered from the day's lowest point at the end of the day, managing to close on with cuts of only 0.5% in trade. Nifty holding on to 22,150 levels at the end of the day. Sensex also seeing a decline of around 0.5 to 0.6% in trade. What managed to hold on to some bit of a gain today when you're looking at it is, let's pull up Nifty Auto. That's among the top sectoral gainers. Other than that, we have the Nifty Pharma that managed to hold on to some bit of a gain there. So yes, keeping an eye out on Nifty Auto, Nifty Pharma, FMCG pack. Let's see what that did, because that also saw a bit of a gain, and that's what we're keeping an eye out on. And other than that, the Nifty Media managed to see very strong gains of 1.6%, managing to close the day on the positive side. In terms of an up move, today we did have all the oil and gas names that in the Nifty were seeing a buzz as well, and other than that also they were seeing a buzz. So ONGC surely seeing a very strong uptake of almost 1.2%. Other than that, we did have GAIL, which was in focus as well, HPCL, Oil India, all of them managing to at least hold on to that green side. Let's pull up Senco, because that's among the third consecutive day of gains that we saw for Senco Gold, and this was after its strong Q4 update. We did have a brokerage note that came in from MK as well, and that's keeping the stock a buzz. Other than that, we did have focus on Ugro Capital among the mid and small cap names that saw a good up move during the day because of the Q4 updates of the company. Other than that, let's pull up the charts in terms of the Nifty 50. What we're seeing at the end of the day, Eicher Motors, Unilever and Titan among the top Nifty 50 gainers. While in terms of the losers, we did have today Infosys, which is seeing clear pressure coming in for the numbers coming out on the 18th of April that we're keeping an eye out on. LTI, Mindtree, IndusInd Bank, among other names that have seen a fall coming in today's trade. Let's see what the mid-cap movers today are. And in terms of the mid-cap names that we are seeing good moves in, CG Power, BDL, Z, that managing to hold on to gains, as well as Laurus Labs, that's holding on to gains. While Emphasis, Gujarat Gas, obviously we're keeping an eye out on that. Coforge, Macrotech Developers, that's seeing a sharp fall as well. And LTTS and Nykaa among the top losers in the Nifty mid-cap. But yes, that's how we're seeing in terms of an move that has come in for the market today. Advance decline ratio is clearly in the favor of advances today versus decline, though the market is not seeing much of an excitement on that front. But yes, so overall PSU banks, Nifty IT, clear pressure coming in on that front. Infosys, TCS, pressure there. Reliance managed to see a bit of a recovery from the day's lowest point, and that came in as a support for the markets. But yes, that's how the day is closing at. Nifty 22,170 levels at the end of the day is what it's closing on, recovered from the day's lowest point.